Good morning, traders. Manny Cabrera, co-founder of MBC Trading Academy, with today's pre-market forecast for Monday, March 23rd, and a preview for the week. Let's quickly jump to our news items for our report for this morning. We have nothing on the docket except a very important news item. The negotiations for the stimulus package to support the American economy stalled over the weekend in Washington, and the market actually violently reacted against it. So today, later this afternoon, there's going to be another vote. It doesn't reflect it here, but there is going to be another vote later this afternoon, sometime today. That may have an effect on the way the market moves today. But the dramatic turnout is that the market does not like the idea that the coronavirus uh, trade bill is not there to support the economy. Therefore, the market reacted. So, what we're expecting is once the bill passes, we're expecting to see the opposite reaction, where we see a little market exuberance. Because right now, the market is taking another tumble. This week, we have 945 flash manufacturing on Tuesday, followed by another manufacturing report. And we have on Wednesday, we have durable goods reports, unemployment claims. That's going to be a really interesting one. Look how it's a nice big giant red. Final GDP for the quarter, and we have personal spending. So those are anticipated to take a little bit of a hit. We're going to see how they go. Let's quickly jump to our analysis. And remember, everything's hinging on Washington right now, which is interesting because they're holding the market up right now. The market at Dow is down over 1%, 0.6% for Nasdaq, or six. Almost more than a little bit over 0.5%, and the futures and the S&P market is down over 1%. So what do we see here, guys? Remember, we're talking about this huge support level from December of 2018. Remember, we talked about this as being one of the final strongholds. Well, that area held twice. It held twice, actually held three times, as the market attempted to break through, and it couldn't break through, including Friday. It held strong, and then it whipped all the way to this new high, breaking out of this channel. Now it broke within the channel again, creating this as a fake breakout. But here's the interesting thing: market breaks below that level and actually gapped. And I'm going to show you the gap. It just filled the gap recently, and is bouncing off this next level, which I have here from way back here, which I had established as a potential area for the market to run to. That's way back in August of 2016. So the market is really having a hard time finding a bottom. I think the stimulus bill is going to help the market just a bit, but you know how the market is a very finicky place. Sometimes what seems should be good news for the market, sometimes it doesn't work out that way. So we'll see what happens. The idea is to realize that this market requires a lot of patience. I've been speaking to some of our traders, some of our clients here in Trading Capital. And what I realize is that many of them think that in this particular environment, they should be doing a lot more trading. And the truth of the matter is they should be doing less trading because of the volatility that we're having. Volatility and volume is good, but these are outlier weeks that we've been having with tremendous volumes, huge spaces or ranges between the highs and the lows, swing highs, swing lows, 100 points, 80 points, 70 points, just really creating havoc with stops. So you have to be very careful, and you have to be able to choose your battle. Here's what we look at. Here's another time frame here. Here's a new bottom on the market. Market breaks through. There's the gap that I was talking about. It was just recently filled. It's being filled as we speak. Market broke this trend line to the upside here, created a compression, broke down. It's trying to find support. It's clearly breaking through here in the market. We'll see what happens. As long as we remain below this pink trend line here, we're expecting more continuation. Not any breakthrough there, we may see a little relief to the upside, but we got to keep our eyes open on this level right here. This is key. What's going to happen after the gap is filled is going to be very critical. Now remember, as I mentioned earlier, Washington is probably going to be, the market's probably going to be keeping its eye on Washington, trying to find out exactly what Washington wants to do with this bill in order to decide what's going to happen next. So what's the next shoe that's going to drop? Let's quickly jump to our trade chart here. Let me get to it. Let me just pause this for a second. And here we go, market breaking clearly through a trend line that we had here in our trade chart here. As you can see, We had an uptrend. This was our huge drop. There is our gap. Market breaks through the gap, clearly breaks through this clear resistance area. If you can see it, this originated way back here. And the market, we adjusted that trend line. Remember, these trend lines aren't based on what we want to see. These are basically trend lines that are done based on price action. And here we go, and we use price action to confirm. There's the market clearly breaking through. Will the market hold on? We're going to see. That's the key. Remember, guys, keep your stops close. Do not over exaggerate your risk. It's better to take many small losses and one big gain than it is to take many big losses expecting to have a big gain. So keep your stops tight, keep it behind key areas, and try to extend your targets. Take care. Let me know if you have any questions.